Alright guys, good morning. Do an audio check. Steve, can you hear me? Bear with me guys, hopefully you can hear most of it. Starting out here this morning, looking at the S&P 500. React to. So right now we're actually coming into this. So we'll just mark out this area up here. Let's go right in between these two candles. Kind of got this wick. So mark off another level. What I'm doing is marking these order blocks here, these candles, looking for places where there might be some reaction. I don't think it's going to come down this far today, but long term I'm looking for price to actually come back down. I like it to come back up here a little bit though before that, possibly next week. But this S&P, it always seems to run on me in a day that I'm not expecting it to. So lay down to 1 hour chart, coming down to this level. It's kind of pretty aggressively down. All I'm doing is looking for levels that I can trade off of right now. Price is coming down pretty high here. It's breaking through that first level. So we'll see what happens here. If it breaks through and rejects it, comes back up, and then we can get a little trade up into this. This is all I do on the S&P. I look for levels to trade off of when I'm day trading. 3-minute chart, 15-minute chart. Got this area consolidation right here. Price is kind of looking down into. What you see is this week, these aggressive downs are actually nice buying opportunities. Down here first. And it's 8 o'clock. The equities opens now for their half. Snapback on it. You can kind of see that yesterday, how these all happened. Let me check, see. Looks like my audio is out. So that we want to continue here, or if one of the other guys might want to jump in and do a quick session with you guys.
Hey guys, if you can hear me, just give me a thumbs up or just say yes. I think we got the audio all figured out now here. Let's double check. you guys should be able to hear me now. I will just be reviewing. Sorry, that was Dave there who jumped on, and who was going to be discussing the S&P gold and a few of the other markets there. Unfortunately, he's been having audio issues. I think he's got a mic that's been going in and out on him. So he's going to try and see if he can't get a new mic here this weekend, and then he'll be doing the live trading session Fridays every Friday morning. So I'll just run through a few things here now with you guys, if that's okay, and I'll get Dave to send me a couple of notes on his pairs, and then I can certainly throw those levels up for you guys onto the charts, and we can see what's happening in the markets today. I'll just do a real quick overview while I'm waiting for Dave to shoot me off that stuff. As I was saying to you in my live session on yesterday morning, the markets had a real nice a push downwards, and Friday is typically take profit day. So if you look at the time, and this is just the dollar index that we're showing here, but if you look at the time of the day, all of the low was set here, so they took out the previous low, and I'll just zoom out here a little bit so you can see the previous swing low over here. It was taken out, and then now they're just basically taking their profits off the table now for a Friday, and the resulting move has ensued. So I would expect price to start to balance out maybe up in here. It had a really nice reaction today. It actually wasn't on the US dollar. I wasn't actually quite expecting a reaction that high, but in any case, we're probably going to see price run up, and then it'll probably just kind of do this for the rest of the day. If it does come up to that level there, price will probably just sort of do, one of these things here for the most part for the rest of Friday. And then into the week, we may see a bit of a drive up, and then we should see a continuation lower. So that's sort of the pattern that I foresee. We bounced nicely off of this consolidation area in here for a drive lower. And then we should see some action. So I'll just zip over to the S&P market, because that's what Dave was discussing there. And if I can pull out a couple of levels here. So he was looking for a reaction in this level. See the small consolidation level in here? He was looking for a reaction in this area here. And if we don't see a reaction ensue in this area, then this would be the next likely area where price should do a bit of a rebound. Typically what happens, the S&P, so we'll just kind of rip out to a quick daily here for you guys, have a look, and you can see there was a nice sell-off in the S&P, and I had actually pulled some levels off of this, so just so you know, like the price isn't crashing or anything like that. But if we go out to a yearly chart, which the start of January was again right there, that red line. Get on there, yeah. And if you see here, so we'll take the low to the high. And the price had retraced only about 50% of the move from 2017. So it's not necessarily like, for about a year anyway, so it's not necessarily like we're going to see a market crash or anything, I don't believe. Hope we don't see a market crash, obviously. But we did give up a nice retracement, and these are just opportunities to get long. They're still driving the market higher, and and I believe we should see further continuation of the upside in the S&P in the long term. Now, short term, and this is what Dave was sort of discussing here today, is we could see a few reactions. So we've got on the hourly chart here, we've got some levels at the 27.50. I'm sorry guys, I'm just trying to zoom in on a chart here that David sent me. Oh, that's a gold chart. We'll talk about that one in a minute. So we'll switch from the S&P and we'll go to the gold here in a second. We're just looking at some small day trade ideas here for now and some potential entries. But what I would like to see on S&P would be something typically like this. So if there's any S&P traders out there, hopefully we're going to get some kind of reaction right in at this level in here. If price wants to go lower, see this big down candle right here. If you see price come and start to skip off of this level and start to wick into it, that's a good sign. Or if it just wants to kind of stab down once and then start to reject, that's a good sign that it wants to take it higher. And then we'd actually be looking for these highs here to get taken out for the day, and then hopefully, and maybe even a push higher if we get lucky. I don't know how much they want to drive the market up today, but there are definitely some levels up in here. Just kind of put a quick sort of level up here. There's some levels right up in here that we could be looking for a nice swing if we get a reaction off of this level here. So we'll watch for that. I don't know. Give me a. Oh, thanks, Marcus. Yeah, our audio is much better. Yeah, like I was saying there, Dave will get a new mic here. Try that this week. And he's kind of been having some audio issues before, and kind of just been getting worse and worse and worse. So hopefully it's just a hardware or just a some easy fixable issue there. But we'll get him back on because Dave is the S&P expert, and I'm just kind of covering for him on the S&P today. So that's kind of what we're looking at. If there's any S&P traders out there, price is coming down into this level right here. Now, and so we should start to see some reaction. So I'll come back to this here in a few minutes, and I'm just going to switch over real quick to a gold chart. So gold, I'll just switch out here to a higher time frame monthly chart and give you some quick analysis so you can obviously see there's a nice uptrend that's been taking place. However, price has really sort of been bottlenecked right now. We're kind of forming a bit of a wedge pattern here right now. And so we should see a breakout on this fairly soon. Give me a second here. So we're looking for the for gold short term. I'm just going to open up a quick chart here. We are seeing some resistance. So basically, you could kind of treat this as a bit of a consolidation play. And again, it's going to fall off in tandem with what the U.S. dollar index is going to do, of course. But we could see some move higher overall, long term. This is a monthly chart, remember. So we could see some moves higher. And start to break out of this trend, and then we'd be looking at areas up into here for a possible target, again, long term. And this could happen towards the end of the year. This could happen next month. It will take a while to get up there, right? These are our monthly candles, so just keep that in mind. But we want to see what's going to happen really, and I'll just maybe draw this in just a little bit tighter here and get the right levels for you guys, just so for accuracy's sake, if you give me 1 second. So we're kind of looking at this high here coming in at 1375. So I'm just going to take this level at 1375 if I can get it, just so you guys can see it a little bit better. And right here. There we go. Okay, that's what I'm looking for. So you can see these are sort of the old highs. We're coming up and starting to tag into this old high here. And we may have even just taken it out, actually. The high coming in at 1357.44, and the high is 1361.71. So we have taken out this recent swing high, which leads me to believe that the steady decline in the U.S. dollar index should see a push higher in the gold market. So we would be looking at the next level. You see these, again, these highs here being taken out would be the next target, and then we'd start to get up into these highs up into here and somewhere in this range here. Now again, very, very long term, so let's focus kind of in on today and let's drill it down. But when we're looking at analyzing markets and looking at charts, you have to start on the higher time frame and work your way down, and then you can get the overall directional bias. and then start to hunt your trades, depending on what type of trader you are. If you're a day trader, you're going to be trading off the hourly and the 4-hour chart, and then putting your entries in on a 15-minute. If you are a weekly trader, or I'm sorry, a swing trader, you're going to be looking at taking your trades off the daily and getting your entries down to the 1 hour and 4 hour. And you know, if you're a position trader, then you're obviously much higher time frames. So you can see here price has been reacting nicely, again off of this nice bull trend, sort of, you know, failure swing here, and then a nice run higher. A little bit sloppy trading in here. Again, this is on a weekly, so these are nice ranges, but you can see how price has been showing a willingness to trade higher. Right, we had a higher low in here off of this guy here, and then it's just been making higher lows, higher lows, higher lows, higher low, and then we're up into this area in here. Now we could see some pullback, so keep this in mind. So we had a nice push up here. We had a 1, 2, 3, 4, 5, 6, 7 week push up to take out this high here. We've failed so far to take out this high, but I am expecting in the next, probably maybe next week even, for this high to be taken out, and then we'll be hunting this high here. So price tried to retrace, pull back, and we actually came back just about to the top of this small little movement in price over here, and then we saw a great reaction off of it, and so far now this is a nice bull uptrend candle here for the week. I don't know, now let's go down to the daily. We could see some move downwards today on the gold market. You can see how price wicked up here nicely, and if we zip over to the dollar index now, you can see this kind of coming into tandem. We'll just zoom in here for you a little bit, so you can see again pretty much the exact opposite of what we're seeing in gold. Right, gold made that that high up here, and then it just took that high out yesterday, and then it's given some back. Same type of thing, right? So now it made the high here, and it came up and it wicked through the bodies here, and now we could start to see a bit of rejection. So let's go down to a lower time frame here. We'll go down to a 1-hour chart, and we'll see if we can't start hunting for some stock, for some trades. So we've got a nice area of consolidation right in here, and I'll just highlight this here for you guys. So nice little area of consolidation in here, and price has traded out of that, and then now we're back to the middle of the range again and retesting these levels. So what we're going to see is one of two things is going to happen. You see these lows down here. What I want to see, more so the bodies than anything, and almost kind of right at the bottom of this sort of triangle there, or rectangle there. But if we see price break down below this line, it comes down. What I'd like to see is a bit of a break, a retest of that level, and then a continuation downwards. And this area right in here, this consolidation area right here, would be our target. So kind of right up into this area right in here. How price has kind of jumped up, pulled back to the top of this area, consolidated, and then busted out from there. That would be, if we're going to see a movement to the downside, what I would like to see. So what I'm saying here is I wouldn't suggest going in and just getting short right now, because you could see this happen where prices come in, and traders would have done it. They see this, they see it break below, they're thinking, oh, it's going to break out, I want to get on the move. They get short, and then they just wick it, and then they start coming up, and eventually they, you know, would have stopped you out if you were going short by just doing you know, taking a short blindly right in here. What confirms the move downward, not every single time, you know, like, and I'll just draw your attention over here, for instance, same type of idea. You see a bit of a consolidation area happening. Right here, right? And then you see price, how it just went straight down, and it didn't really want to retest this area before it continued down. You do run the risk of this happening, and you could miss the trade, but you could have easily entered it on this candle right here. So remember, you want to sell on an up candle and you want to buy on a down candle, and those, by doing that, it gives you the highest probability and quickest method to cover the dealer's spread by doing that. So just give me 1 second, guys. I just got to type a quick note here. And so what we're looking, so this is what I'd be looking for on the day in the S&P, and just for them to come in and just kind of balance this price range in here. Back down here again, we had a nice push up. So this was Friday, Thursday, Wednesday, Tuesday. Monday's trading opened right here. So this was Monday's trading. I'll just note that. And you can see here on the week, we've had a great push up on the week. Now, typically what happens, and I mentioned this on Thursday, typically what happens with traders, large institutional traders, commercial traders, things like that, a lot of them put their positions in on Monday and then they hold for the weekly range, and a lot of them will, not so much banks and things of that nature because they've got deep pockets, but they will typically get out of their positions on Friday and basically sell into profit. So you can see here they've been buying this stuff all week long in here, had a nice big buy rate in here where they're dropping the market down. They bought it, ran it up, and then now Thursday, Friday, they're taking some profits. So again, we could see some weaker market price action on gold to finish off the day. Now, we have done a fairly significant move in here already. So if you don't want to see price have a willingness to break these lows here, if it does, like I say, look for the retest to get in, and we could see price start to move down towards this area, which would be your target. But if price fails to break this, it means that they've kind of sold off all their positions that they're willing to do, and we may just kind of sit into this range here on the day. I'd like to show you fireworks and some great price movement and everything else. I can't guarantee it every single time, obviously, but all we can do is just sort of call out the levels, look for the reaction at those levels, and if the reaction looks favorable, we can get in, and if it doesn't, well, there's not much we can do about it. We just got to hold on. And that actually happened quite a few times here this week on us. There was some great market movement. We got in on a few trades, but there was a few trades that they didn't come down to our entry levels, and unfortunately the bus left without us. So it's one of those things with trading. And the beauty part of it is the markets will always be open the next day. So if you miss a move today, don't stress, don't chase it, because there's always another opportunity to get in. And let me just kind of give you a quick example of that as well too. So you look at this big movement up here in price. Well, a lot of people, if you weren't able to get long in here, you could have got long in here on this small retracement, or you could have got long here on this small retracement. Like I've been saying, right, price has been making higher lows on this gold market, and I've obviously identified a whole bunch of them in here. I'm just talking about a very, very small range in price here right now. But these are you want to buy the dips, and you've heard this before. This is nothing new that I'm telling you. You want to buy the dips, right? So price will always give you a second chance to get back in on a lot of these moves. So if you miss these moves going up, again, don't chase price, because you could have something like this happen where you say, oh, I'm missing the move, I got to get in, and then you get in up here, and then they drop the price, right? And then you're thinking, oh, damn, I missed the move, and price is going to reverse, and it's going to come all the way back down here, I'm going to lose a bunch of money. So then you sell, and then what do? They run the market back up again. So same thing here, right? Everyone's thinking, oh, I'm going to miss the move, price is all the way up here, I got to get in, I got to get long. And they bring the market all the way up, and then they'd sink it and stop you out. And so it's designed that way for a reason. It's to trap retail traders into that type of mentality that they're missing a move, and they're missing out on the bus, and it's going to leave them behind. But if a lot of traders would just sit on their hands and act patiently, and realize that tomorrow is always another day of trading, and price will always come back and retrace back down to give you another opportunity. you know, like I say, you look at the gold market and just in particular, and gold essentially has been in a very, very nice bullish price movement since you know, the end of 2017. And so it gave a lot of opportunities to get in and to go long if you're a position trader. So, like I say, don't stress if you know, this guy here. If you miss this move, if it comes down and you don't get in on the short up here because you were walking away from your computer for 5 minutes, again, don't stress because there's always opportunities to get in. So that's sort of the levels. Now, alternatively, I'm just kind of getting a note here from Dave. Yeah, so you can see here now, price is pushed down on the S&P. He just kind of sent me a note here a few minutes ago. Price is now pushing up nicely on the S&P. So here's what you could look at doing. I'm just going to rip down to a quick 5-minute chart. See how price exploded up out of here. You can pretty much buy this. Just wait on this candle. Don't buy it yet. I'd like to actually just see it come down just a little bit. See the high of this candle here? If we can get price to come down here, then you could certainly get all over that. And again, these would be your targets up here. Where are we? Right here. That would be a great target for the day. And let me just flip over. I'm going to flip over to my demo account. This is my this account here for everybody. You know, everything that I'm doing here, this is all a demo account. We're not taking any trading, any live funds, or doing anything like that. But I'm just going to flip over to a demo account, and this is my analysis account, the one that you see on the screen. My other demo account right here is one that I take demo trades in. And so we want to, I just want to look and see if we can't get in, and I'll actually just, and I'll just, let's just see if we can't get a movement here. So put an order in. I'm just going to do one contract, you know, we're not going crazy or anything, and rate anytime about, I might go a little bit lower, but I'm going to take it in here. And you can see the spread, right? You can see that spread. It moved us up quite a bit. So that's why you definitely want to be buying on down candles at all times so you can cover that dealer's spread. So I'm going to take a long, I'm going to set up some stops in here and some targets, and I'll just adjust these here in a minute. I don't want these to stop me out. There we go. So we'll put my target in for up here on the daily range. And I want to put a stop in just, price shouldn't, and you know, just depending on the spread, I'll put it here. Typically though, we shouldn't see price want to come back down and clear out this low. If it does, we could go a bit lower on it, but you can see, the spread, like I got in when price was just about right here, and the spread kicked me up a couple of pips higher. So we should start to see price reverse in here if it is going to go up, and it shouldn't need to go any lower than what it just did. So on the 5-minute candle, you can see how the high of that candle just got touched right there. I'm hoping we won't see price go any further than that, and we should, like I say, get some nice reactions off of this level. So let's see what price does. We'll just watch this here for a minute, and we'll see this develop, and if we get some nice movement up in here, then I'll just leave that and come back to it here in a few minutes. If price breaks above, let's say, this high here, then I will want to move my stop up to break even, you know, plus a couple, and if it does it, I don't know. Like I say, it could reverse. We could be on a downtrend for the day. Or it could come back down and double tap. It likes to do that as well too. When price comes in, makes a low, tags off of an old high, sometimes you get a nice reaction like this, for instance, right? So I'll just zoom out a little bit. So price here basically was tagging off some old highs over in here, and price just came down once, completely reversed, nice bullish move up to the upside, and it went away. But then, and that's kind of what I'm hoping for here. In here, however, and I might just maybe adjust my stop just a little bit in case that happens, but in here, for instance, it came back down and it double tapped. It created the low, and then it moved higher, but before it did it, it came down and tapped it, and then it went higher. So if you were doing basically what I'm doing here, and you put your stop right under the low here, you would have got tagged, and then you would have missed out on the move. So I might just go in and just adjust this just slightly, just to come down maybe a little bit lower than that. Price shouldn't, if it's going to continue moving bullishly upwards, we should definitely not see a move down below this wick here. But I'm hoping that that high of this candle here being tagged with this move, that was as low as they want to go, and then we should start to see it move up higher. So we'll watch and again, this is a demo trade. This is not live funds. If it stops us out, it doesn't matter. Didn't lose anything. This is just all for practice. We're just in here practicing, honing our skills basically for the day. So what we want to do, just to give you an idea, so I want to, let me pull up a 5 minute. I'll leave it on this chart here. I'm going to put my day dividers on so you can see. Okay, so these are the day dividers. So if you look at this in terms of how a daily candle would look, I'm just going to draw something out for you just so you can kind of get an idea of what our thoughts are on it here. So this being a daily candle, okay? Now we have been in a nice uptrend, and I'm just doing this while we're watching price here basically. So I mean, this isn't necessarily that important. If you're just here looking for a trade and you got your trade idea for the day, that's pretty much, I don't think we're going to be doing any more trade other than this. It's not good to take 100 trades at once. Just focus on one, get your profits on the one for the day, and move on. But what I'm suggesting here is, if this is the daily range, okay, from the high here and the low was actually right here. But let's say we're going to have a nice bullish move upwards on the day and finish Friday out on a nice bull candle. What price is going to do is it will just change this up here just so we know what we're talking about here. I'd like to basically see this happen on the day, and if this is going to be a bull candle, and then we'll just basically do this, and we'll get that low, pretty close to that low, right? So we actually, let me just get this right here, we actually opened right here, okay? So Friday's trading opened right here, okay? So I'm just going to bring this up just a little bit, right about there, okay? It wicked straight down to the low right here, okay? And what I'm hoping is going to happen is price will come up. I hope this isn't the high of the day. I hope we're about to create the high here in the next little while. But hopefully price will come back up, push higher, and then close, somewhere right down around here or whatever. But this is kind of what I'm hoping that the day will look like, somewhere in this neighborhood. So that's sort of what you're going to see. If you look out on the daily candles, I know we flip to a daily, that's kind of what I'm hoping that we'll see. So you see this yesterday, this was a nice big daily up move. That's what I'm hoping we're going to see here today, is this type of idea on, no, it doesn't look right. I'm going to zoom out. Close enough. So that's kind of that's what we're looking at. So when you're trading the S&P, you watch for price to create that low, and that's where you get long. And again, you only do this on a bullish sentiment, right? This is a nice bullish move up here. They are trying to regain a little bit of the ground that they had given up after getting these lows. And you can see here, talking about the double tap, right? And I think, again, it's an S&P market, so it's just been a bull market that's been going up for the past number of years. So they're going to continue that. trend higher, I would assume, and up until we get up into this level in here, and then there could be some reactions up in these levels up here. We'll worry about that for another day when we come to it, but that would kind of be where our focus would go to. And we are trading to a small, excuse me, we are trading to a small consolidation range in here. So you kind of got to be, whoops, sorry guys, I just accidentally grabbed my stop. We are trading to a small consolidation range in here. So we could see a little bit of messy price action before it punches through, but we are anticipating this to go higher up into these ranges in here for the S&P. So we're seeing some nice bullish movement upwards now, and so I think we've kind of achieved that today. Didn't quite get the low, obviously, but we got a nice reaction off of this level. Bought basically right off of the top of this candle here. The spread kicked us up to our entry level here, unfortunately, and again, which is why you buy on a down candle, because of the dealer spread. And then now we're looking for a move, hopefully up to here. We'll watch price back up into this level here. If we don't see any willingness to get above this level, then we may even collapse the trade from there. But we'll have a look at it, and I'll just monitor that as it progresses forward. So. If you have any questions on that, I've got the chat window up in front of me here. So by all means, ask away. I can do my best to try and answer your questions here, but hopefully I've done an okay job explaining that to you guys. So I will flip back. Now, another pair that I wanted to just talk about here is the US yen. We had some good movement on this here this week. Again, I'll flip out here to a daily and zoom out a little bit. Price was, these are the opportunities to make some serious, to capture some serious pips here. So you look at price here, it's been trading in this giant consolidation range for the past year. All of 2017, it was just locked in this trading range here. Now, if you go to a monthly, you can see the yen has, the US yen has basically broken out of this bearish trend here. Okay, if you're a trend line trader. So price was steadily creating lower lows all the way through here. And I'll just switch this back over here so you can see a little bit better. Give me a straight line. Come on, give it to me. There, okay. So you can see price came in, created a high, created another high. Created a high, created a lower high, another lower high, and then price came all the way down here and created this sort of low consolidation area down here and then traded up. Now, a lot of trend line traders who are trending off this trend line here were thinking, oh, price is going to drop down and continue lower, and it exploded out of here. Okay, and then it retested the back of this trend line and then exploded higher. So what that kind of leads me to believe is that we are starting to break out of this downward trend here. Now, the yen is showing some strength on the on the short term. So like right now, basically for the next little while, it is showing some strength. It was showing some continued weakness in here, which is why you saw this big bull move. And now we are seeing some strength. So we could come back down here and test these lows back in here. So if I zoom in, you can see I got a whole bunch of shrapnel on the chart here. Give me a second. You can see a nice consolidation area forming right in here. And just give me 1 second here. Just asking Dave if you can just keep an eye on an S&P trade while I'm talking about this here. I'll just flip back. I just don't want to see a move out. Unfavorable move. Okay, so it's still going on. Okay, so you can see here the the yen pair now has finally broken out of this massive consolidation range. This is and I'm on a monthly chart here, so this is a yearly This is a year. Okay, it took to finally break out of this consolidation range. Now we're heading back down to here. So you got to look at this on the overall time frame. They could be just coming down to grab some of the liquidity down here. They may want to test these lows again here. The yen has been showing some strength, so we could see a movement to the downside. But in the interim here, these are monthly candles, so we do have some room for movement still in here. So you could basically go in and you could say, well, we've got some lows in here, and let's just call this candle high as the top of that consolidation range. That would be sort of the first target we would be looking at to get tested. If it is going to see a reaction at that level, which it typically does, then that's where we're going to see it. So this small consolidation range in here, and I'll just zoom in here on a weekly and get to see this right in here. So that's sort of the top of this red line here. That's sort of the top of that consolidation range in here. So I would be looking on a downside target, the US yen. That would be sort of the target long term, and that could take another 2 weeks to get there. A week, it could happen next week, and then we would see a move higher, hopefully back up to this bottom of this red line here. And then if we're going to see continued weakness on the US yen, so basically what I'm saying is I would like to see this happen. See some kind of reaction either off the lows here or the lows up here. So I'll just maybe drop this guy down here. That's the easier level for now. And then this to occur, if that's what's going to happen. You know, again, the US dollar is starting to show some weakness again. The US yen futures contract is showing some strength. So we could, like I say, get some movement to the downside on this. So we will see what happens and what ensues. But for a day trade, we'll just go in and look at this a little bit closer. And Dave was suggesting a few levels here off of the 136.74 level. What's he on here, an hourly? Yeah, so you can see here, just back to the daily real quick, you can see here price jamming on this consolidation range here. I'll just bring this up a little bit. And then price wicked through once, rejected, came back up, tested the highs again, and now we've convincingly broke through this low here. So that's going to be a nice downward trend that should continue. Now we did see a bit of a reaction. Price came in, tagged right off of here. We're seeing a bit of reaction, so we could see a small movement higher. We may not get this down move down here yet. We could see price come up and do this leg first before it rolls over. It did see a nice reaction here, so we will be watching for that into next week. But what I would anticipate is happening is if we continue to see this downward momentum and this downward trend in the US yen, what will happen is price on Monday and Tuesday, early next week, basically, Monday or Tuesday, it could create the high, would do this, and it would trade up if this is what's going to happen, and then we would finish lower. Going back to my previous example in the S&P about the whole, you know, the candle and everything like that, the daily candle, buying on the, if we're going to be bullish on the day, we buy when it's wicking down, and we ride it out for the highs of the day. Same type of thing on the weekly, right? If we're bearish on the US yen, you got to look at that weekly candle. Remember the open and close. The open is could be, you know, let's say price finishes off. I'll just zoom in here. Let's say price finishes today and it comes back up to this low here, this daily low over here. Okay, I'm just saying for argument's sake. I don't know where it's going to go. Let's say it finishes up here. Next week is going to open right here. Monday's candle is going to open right here. And what I would be looking for is that wick to form, okay? And I would like to see that wick come up to basically, we get kind of a nice confluence here. I'm just going to do something real quick and just sort of see. That's kind of a nice, I like this area. Between this candle's low and this candle's low would be a great area for price to reverse. So what I'm saying is you see this, what I'm predicting, I'll just maybe do this here so you can kind of see it a little bit better. So again, we finished off, trading closes today. It does what it does. It goes up, it goes down, I don't know. What I'm hoping for Monday, if we're going to see this continued bearish action on the US yen, I would hope to see price is going to scream up Monday and Tuesday, creating the high, creating that wick. It opens right here, let's just say, creates that wick higher. This is where I'm going to sell into it, okay? Anywhere in this range, I'm going to be selling into that movement higher. And then what I want to see happen then is as price hits that high, start to reject, come back down below the open, and then create that bearish close candle for the week and then finish somewhere down here. So that's kind of what we'd be looking at for the US yen. And again, like I say, Friday, Thursday, Wednesday, Tuesday, Monday, nice bearish weekly candle. So you can see here, all right, nice big bearish weekly candle. They've sort of hit their profit targets for the week, and everyone's sort of getting out of their positions, cashing in their positions and their profits for the week. A lot of traders don't like to hold their positions over the weekend because of fluctuations in the markets. You know, sometimes there's like, for instance, like G7 meetings or G12 meetings, and they come up with some ridiculous policies, and all of a sudden the market goes crazy on a Sunday, and then you come back to Monday's trading, and you know, it's like 1,000 pip swing or a black swan event or something like that. That happens. You don't want to be involved in that move, so you would typically close your positions on Friday and take your profits if you have any, and then come back on Monday, watch to see what price is doing, and then enter again from there. So that's kind of the idea. But the yen, again, just coming back into here, we're seeing a nice movement higher. Like I say, I would like to see price come up a bit higher before we get in short. But we are definitely looking for bearish price action. And Dave's got some levels in here that he had mentioned at 196.70. I'm sorry, 196. 106.74. So that takes us to pretty much this red line right here, guys. Right where I had been discussing, yeah, about 70. You could call it 70, 75, somewhere in and around there. So I'll just zoom in a little bit here for you. So right about here, and I'll put the day dividers on, and that would be that Wednesday low right here that would be looking. Now, price did, I actually had a signal on this one on Wednesday, London open Thursday, where we were short at 106.80 and a profit target of 105.50. Panned out perfectly. However, so price came down. I put the signal on just after this candle here. Price came down. I put the signal on 106.80. Sell short. This candle right here, it actually fell on my broker. It actually fell 1 pip short of my entry, so it didn't actually enter my position on my demo account. I'm sure a lot of our members in our program got in on this, and they got a nice downward movement of 130 pips on that. So you can see that was my target, and that was a move. And so, about 130 pips, give or take, what they could have saw. And that was yesterday's signal that went out. And then price came back up and actually double tapped, right? Remember what I talk about with your stop and everything? You want to put your stops too tight, because it does tend to have the tendency to come up and double tap. So now we saw price trade down, and now we're seeing it get a little bit weaker, or stronger, I guess, in this case, because it's going up. And what I would be looking at seeing is price coming up, finishing somewhere in this range here on the day. And then hopefully, like I say, Monday, if my analysis is correct, we should see price move potentially Monday, Tuesday, creating the high up here, and then dropping lower. And you can see this candle wick down here. So that would even be, just to refine the entry a little bit more, that would be a great entry right there. If we could see this, where if they just came up Monday, Tuesday's trading, scooped up the liquidity right here, rejected, and then came off of it, that would be perfect. So that's sort of what we're looking, and it may not happen, right? I mean, keep that in mind. Price doesn't always do what you want it to do, so price may just come up here on the day, and maybe it finishes softer. Maybe today finishes right here, okay? Right in this area. Kind of right in the 50% range of this move. All right, let's just say price finishes right here. Whatever. Monday, Monday could create the high, and it could come back up right here. and then start to trade off. Right, so you gotta be aware of that too. You may not, we may not get this extra push up into this area that we'd be looking at here. So all you do is you set your levels on your chart. So we've got 1, 2, 3 levels on the chart, and you just watch and see what price does. Okay, so if price comes in, so let's just say this is my candle. Okay, we're in here. Price on Friday. Price finishes right here. Let's just say Monday opens up, and Monday starts. Monday opens right here, and then it starts doing this. It starts climbing higher, and it starts. Let me get rid of this. And Monday starts doing this. Kind of doing one of these things. Wick, pop up, wick, drop back down, pop up, wick, drop back down, pop up. Right, that kind of gives you some indication that it may be hitting some resistance on higher levels, like it kind of did here, right? Price came down, traded down, wick, higher, traded down. Came back up, wick, higher, traded back down, wick, higher, traded back down. We could see that exact same thing happen here. Just wick, higher, trade back down, wick, wick, wick. Now, if price has a willingness, if the body of these candles, if the body of this candle here trades higher than the body and closes higher than the bodies of these candles, and I'm on an hourly chart right now, then you look and say, okay, price is showing a willingness to want to close higher than here, which means it's breaking through the resistance. So let's go to the next level, and let's test that theory and see what happens at the next level. Remember, you don't want to be too eager to get into trades. Don't jump into trades. That's where you lose money, is where you jump into trades just blindly doing it, thinking, I'm just going to go in and maybe you're a scalper. Maybe, if you're nimble enough and you can do it and you're a scalper, maybe that would work for you. We're not doing scalping here today. We're just kind of doing a quick day trade. Ultra quick scalping, doing like on a 5-minute or a 1-minute chart. Guys are in and out in a 10 or 20-minute move, and that's their day. Great for you if that's what you want to do, but that's what we're not doing here. So you just watch the levels. Again, if price has a willingness to close through this level here, then you watch the next level, which is up here. Actually, technically, it's right here where I'd like it to be. Just kind of refine it a little bit. And then you see, like right here, see, price had come down, traded off, wick, 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 fell off. If price makes it through this level here on Monday, then you look at the next level and you say, okay, well, price is coming up. What's it doing? Is it wicking? Is it showing a willingness to not want to close above the highs of these candles? What's price doing in here? Oh, look, it just closed above. Now this candle just closed above here. Okay, so now what's the next level, right? And then you come up and you say, okay, it's right here. That's the next level. So what's price doing? What I'd like to see is price literally just come up, just touch it. I don't really want to see price go too deep into this. See this small consolidation level here? I don't really think that we need to see a move back up into this level here. It could, and like I say, it could just kind of just stab into it, and then I want to see an instant rejection. So this would be sort of the last line in the sand. So if we start trading higher on Monday of next week and trade up, I don't want to see price go any higher than here. This would kind of be the highs of this consolidation area. That's it. If price wants to go higher than that, then it means that they want to take price back up into the overall consolidation range, back up in here again. And I don't want that. I don't want to see price do that at all, because it's already traded in this level. We shouldn't need to come back and revisit that, other than, again, maybe just a quick wick into it and then a rejection. But price definitely should not want to close. Like, we should not get a full green candle close up into this area. If it does, like I say, it wants to do something else, and our idea is negated. So that's what we're looking at into next week on the US yen. And we'll be doing live sessions again. We don't do them on Monday because Monday's price trading isn't necessarily favorable. The week is just opening up. There's a lot of movement in the wrong direction. So we wait for Monday to close, and then Tuesday, live session, 12 a.m. London time, and we're going to get going on the day. And we'll be looking for some levels to trade off of. So what I want to see, I'm going to come back on Monday, we'll look at this again, and we'll say, okay, did this pan out? Where did price finish on Friday? Where are we now you know, again, this is Tuesday morning, London Open, 12 a.m. New York time. We'll be doing a live session, and we'll say, okay, where is price trading at that time? Did we push through this level here? Yes, we did. Okay, great. Where are we here now? So we're up into this level. Okay, let's say we're looking at this now. Price is doing this right now. Price is sitting here doing this. So we'll watch that for London Open, and we'll say, okay, is price going to want to continue through this level and close higher? And we'll watch for that. If it does, okay, great. Here's the next level, and we'll watch that. And then we'll put our signals out based on that. If there's no willingness to come through this level here, we'll put a short sell on at this level. Right there. And I don't like odd numbers like that. Ah, really? Come on. Okay. So that would be, for instance, and this is, keep in mind, this is not a sell signal. This is just to give you an idea. That's what we would put out. And I'd say, okay, there's our signal there. If we're going to trade this, are we holding for the daily? Are we holding for the weekly? What's our range? We'll specify that, and then we'll say, okay, we're going to hold this. Let's just say, for argument's sake, we're holding for the weekly, and we say, okay, our target is going to be somewhere down here. You know, these old highs in here. You know, we're going to start looking at, or this consolidation area in here. That's kind of our next target. Maybe even this little gap down in here, which was filled on this move, this price movement down here, by the way. But you know, or maybe this low here. I don't know what it is, but that's what you do. You know, come London Open on Tuesday mornings, you start setting your levels for the week. You start looking to see where price potentially could go, and then you get into it. And you always sell on an up moving candle and buy on a down moving candle to clear that dealer spread. So that's all I got to say on that. This is wicking in here. It's not really doing what I want it to do, unfortunately. So again, if we see price move down any lower really than this wick here, like I don't want to see it come down. I mean, I might permit it to come down just a little bit, but I don't want to see it go down much more than that. I would have liked to see those two candles just continue, kind of put a tweezer top in it right there, so which leads me to believe we may see some selling on the S&P. And again, you know, price doing one of these things where it's sort of created the a support in here that was broken, and now they're treating that as resistance. So price could be up in here tagging off of that, and we could see price drop lower if that's what they want to do. But if price closes, so you see here, this candle here, if this price closes lower than the bottom of this green candle, it's going to negate this trade, and you can get out of that. But I want to see what happens here. Like I say, we've had a nice bullish move on the week, and I'd like to see that continue. I don't want to see it necessarily go too much lower than what it is. So we'll wait and watch that pan out. But any questions, like I say, on the yen, on gold, I kind of started on gold here, and it's really not doing a whole bunch. Like I say, this would be the level in here. If price wants to break lower than this, then we would, come on, get straight. If price wants to break lower than that, then we would be looking for the break, the retest. Right, something like that. So that's what we'll be looking at gold. But price is kind of trading slow today. It's Friday, guys. It's, you know, we're 10:15 in the morning, so I don't necessarily think we're going to see a ton of fireworks today. We may just kind of see price just start to sort of settle down here as traders are looking at their weekend plans. They're, you know, it's New York. It's going to be New York lunch here in about an hour and a half, and so, you know, guys are going to be skipping out at 11:30 to go for an early lunch, and you know, probably coming back on Monday type of thing is what happens a lot of times. So you know, we'll see what happens. I don't see a whole S&P though. You can see some good moves on Friday still in the day, but yeah, I don't in terms of on forex pairs and things like that. You know, like these yen pairs here and that kind of stuff. I don't think we're going to see a ton of action. And I'll just see if Dave has anything else for me here that he wants me to discuss. And again, sorry guys, it's sometimes with doing these live sessions. So just so you know, if you're not part of our signals group, there's a small group of us. There's 3 analysts, myself and 2 other gentlemen, Dave being one of them, and another guy out of the UK. And we sit down and we analyze the markets, and we all have the exact same trading style. Just so you know, um, you know, the guy out of the UK, he's a bit more of a short-term trader. More of a scalper. He likes to be in and out of market movements. Um, and so that's his trading style, and he trades the London Open session on Wednesdays. So if you guys want, if that's your trading style, if you like to be in and out of the markets in real quick, 30 minutes, an hour tops, the type of thing, he's definitely your trader. Not necessarily 30 minutes or an hour. I mean, he does do day trades, but he's just that more type of quick reaction trading. Just in and out, and grabbing a few pips here, a few pips there. But he does it a few times a day, and then he'll make his weekly pip haul. Whereas myself, I typically like to trade more of a day trading, up to, I will do weekly holds if the condition is right. I do have the patience most of the time to sit down and watch price develop. So if you're more of a longer term trader, not a position trader or a swing trader necessarily, but a day trader slightly longer, I guess. I typically wouldn't hold anything for longer than a weekly range, and price would have to be favorable. But if that's more your style, I trade on Tuesday, London Open session at 12 a.m. and Thursday. So you can jump on, you can check out me doing that. And then Friday, and I'm going to see if Dave can get his audio working again here this weekend. Dave trades the New York Open, just because he's based on the time frame, and his schedule allows him to trade more so New York Open. So I'd actually like him to pick up maybe another day during the week, maybe on a Wednesday as well too, or a Tuesday or something like that. But if that's more your style of trading, during the New York Open, then definitely Friday mornings. He'll be the one that you're going to want to look for. And Dave trades the S&P gold, obviously, and the UJ, the US yen. And he'll look at all the other markets as well too. But he's typically a day trader as well too. He's in and out once or twice a day on some trades, so that's kind of his style. And I think that if just depending on where you're at the time of day, some people can't get up for 12 a.m. New York time because they've got jobs the next day and they're sleeping, right? Totally get it. That's traders across the pond, and I'm in North America, and so is Dave. Traders across the pond, that's their bread and butter. I mean, that's when they're up, that's when they're moving, and that's when they trade the markets. Great. If you are in the Western Hemisphere, then 8 a.m., 9 a.m. in the morning, New York time, that's more your bread and butter, and that's the style you like to trade. So jump in on Dave's feeds. And like I say, I'd like to get him going and doing one more live trading session during the New York. So once we get another session going for the New York, I'll let you know, and you can look forward to doing that. But if you are a member, you can see our schedule. You just go down to the live webinars tab on the section of our website, and you can find out where when all our live trading sessions are. And just go back to this S&P trade. Look at this for a second. We're seeing some nice movement upwards, so I want to see that continue. And just so you know as well too, if you're not a member of our website, you can jump on, you can check us out for 2 weeks. You can give us a free try, and with no cost to you whatsoever. And you can see the signals that we put out. We don't, look, I'll tell you right now, we don't win every single signal that we put out. But we manage the losses, and we mitigate them, and we minimize the losses, and we maximize our gains. So one of our trading philosophies is that anytime price moves, you get into an entry, whether it be a long entry, a short entry, whatever you do, if you get in and price moves 30 pips in your favor, always take a portion of your trade off and capture that profit. And they can't take that away from you. So no matter what it does, price goes up, price goes down, you've always got that banked, and that's in your pocket. What you also do in conjunction is you move your stop up to break even, or break even plus 1. And that way, if they want to come back down and do something totally different, it doesn't matter again, because you've captured that first 30 pips, you put that in the bank, and you're set. And if you trade with that style of trading, and if you take all of our trades, it averages out and to being a winning combination and a profitable trading experience, and that's what we're trying to get. So we're not in here throwing 100 signals at you a day, but you may get throughout the week, you may get a half a dozen trading signals, right? You only need one or two of those to go to the full target to be profitable. And if you had two or three of them that got you partial profits, 30 pips, and you had one or two of them that stopped you out, over the long term, over the week, you're net profitable, and that's what you always want to be. You always want to see your bank account, your trading account going up. Yes, sometimes it will take small dips down lower, but you want to control those downward slips and maximize on the upward gains. And that's what we're trying to get you to do, and that's what we really teach and what we're trying to help you provide. So there are some signal services out there that you go and they'll throw 50 different signals at you a week. They're all over the place, doing exotic pairs and currency pairs that you've never heard of, and huge dealer spreads on them. And I mean, we don't necessarily do that. We trade the majors, the Euro USD, the pound dollar, the US yen, gold, S&P, oil, things of that nature. Those are our target focus markets, and we'll stick with those ones because those ones are the more predictable markets, and the more profitable ones in our opinion. Yeah, you can get some wild fluctuations like the pound yen, for instance. You get some huge price fluctuations in that, and we will trade that one from time to time. But we don't do any crazy exotic currency pairs or anything like that, or like I say, send 100 signals at you a week. It's very focused, very specific, and very easy to follow. So if you're not a member, jump onto f45trading.com. Move stop up below last swing low. I can do that. So let's move our stop up here, right about here. Whoops, right here. I think that's what you're saying, Dave, right about there. Give me 1 second. Oh yeah. So what? Sorry. And like I was saying, if you're just joining us now on the feed here, that Dave had some audio issues. He trades the S&P. He's just kind of giving me some notes here on where to move the stock. I don't trade the S&P. It's not my target market focus, so just kind of giving me some suggestions here. So if I stop talking here for a second and there's a dead air, that's why. I'm just kind of reading some notes from him. So. Anyway, that's kind of what I was discussing. So anyway, F45 Trading, and I don't know how the hell it got all the way up there, but let me put that down here. So go to f45trading.com if you are not a member. Check us out for free. It doesn't cost you anything. You can see how we work those signals, how we trade the markets, some of our analysis. And that's the other thing, is we give away so much free analysis right now. It's insane. And so you can always gain some type of market insight, some type of bias, depending on whatever market you're trading. Going into the next week, we offer live analysis videos on every Sunday that discuss the market coming up for the next week to kind of give you some ideas that we're looking at. And then we do live session Tuesday, Wednesday, Thursday, Friday, and signals all throughout. And then on top of that, guys, we also have live chat rooms that the three of us we moderate, and we're in all day long, 24 hours a day, 7 days a week. It's always on our phones, and the signals go directly, instantly to your phone. You get an instant update when that signal goes out, and so there's constant communication, constant contact, and a lot of great information there. So if you're not a member and you want to check this out, I highly recommend going to f45trading.com. Sign up. It's free for 2 weeks. It doesn't cost you anything to check us out, and you can see all the great stuff that we're doing here. So, and the other thing too is, if you got any questions, we're here to help you. So if you need anything specific, we don't discuss anything portfolio related. So just so you know, we're not licensed traders. We don't work for a broker. If you come in and sit down and say, well, what broker do I use? I'll give you a list of like 3 or 4 of them. We're not affiliated with any broker. You have to find the broker that works for you. That's one of the main questions. Myself personally, between my demo accounts and my live accounts, I trade on about 3 different platforms, to be honest with you, with 3 different brokers. It's always good, and what I'll recommend, it's always good to have a few options. Don't lock yourself into one, um, because they will give you different prices on every single platform. So, for example, I'll give you an example. So, this demo account that I'm doing here, that I took this trade on, this is an XM demo account with XM.com. There was just a broker that I found. They're well known, they're reputable, they've got good price action. And that's the other thing too, is fluid price action. You don't want to see gaps in your data feed, okay? That's where you typically run into issues with brokers. So you want to find one that has nice fluid data feeds, and covers a lot of currency pairs, right? So you want to see, you see this list here? You want to see a huge list of covered currency and commodity pairs. Just a quick update on this S&P. We're just going to move this stop to break even. So I'm just going to run this stop up here, break even, and I don't want to see price have to come all the way back down here. It shouldn't need to. It's covered this price range quite well. If it does, no big deal. You didn't lose anything, but we're seeing some nice action in here. And actually, to be honest with you, if you are trading more than one contract, I'm only trading one contract, so I can't take partial profits on it. I should have traded 2. Take some profits up here as well too. Just take some partials and move your stop to break even. Price is traded up nicely, and I'd like to see a move ensue and continue up here. But we could get a bounce at this level here, so just keep that in mind. Price may not show willingness to trade through it. So if you are trading this, take some partial profits off here and move your stop to break even. And again, going back to what I was saying earlier, that's what we do. That's how you stay profitable right there. The price is moving in your favor, take some profits off, move your stop to break even. Let the trade continue, okay? And we'll let you know when to do this, so you don't have to do it on your own or guess or anything like that. But that's how you stay profitable. It's simple as that. So anyway, sorry, back to the brokers and data feeds and everything. I trade with about 3 different platforms. So MT4 I do my analysis on. This is the demo account that I use with XM. I have another demo account and I just strictly trade. I don't trade on this account. It's just strictly for analysis. And I use another one called Vantage FX. They're out of Australia and they're out of Canada as well too. And I use that one, so you can. Oh, shoot, sorry, that's not going to work. But it's just again, and then I have another account with another non-MT4 broker. And so when people come in and say, well, what broker should I use? I just say, try a few different ones, see what you like. Whatever, works for you is, is best. I don't recommend, I'm not affiliated with anything. So we're not getting kickbacks or anything like that from any specific broker. And so you don't have to worry about anything like that. We'll be as honest and open with you as we possibly can. And we're just here to assist you in your trading. Ultimately, you are responsible for your own trading. Again, we're not licensed, we're not brokers. We don't have our mutual fund licenses or anything like that. All of the commentary and all of the analysis that we do is all of our own opinion, and so you take that information on your own accord and you do what you want with it. But we just are here as a resource to assist you is basically all we're trying to do. Help you, give you a little bit of market guidance and hopefully push you in the right way. And I really wish, when I first started trading, and I've been trading, just so you know, just a little bit of background. I'm just kind of rambling while I'm watching this trade. I'm going to shut down this live session here in probably about the next 5 minutes or 10 minutes or so. I just want to see price get above this high here convincingly and close higher, and then I'm going to close this session and we'll let that trade pan out. But my background, I've been trading the markets for the past 20 years now. God, I can't believe it's been that long. So I'm in my late 30s now. I'm almost 40, a couple years away. I actually turned 38 later in the year. But I've been trading the markets since I was 18, so about 20 years now. And in the beginning, and so this was the bull markets of the late 90s. I got in, and the part of the world that I live in is a very highly energy-rich resource basin in oil and gas, and so I got a lot of inside track. I knew a lot of people in the energy industry, and got a lot of inside information, and I mean, I grew my account on beyond my wildest dreams. And I was a kid. I mean, God, I was 18, 20 years old, you know, living the high life. And because I mean, don't get me wrong, I wasn't making millions of dollars or anything like that. But I was making strong six figures in my trading account, and low six figures. And I just thought, hey, this trading thing is no problem. I was working with a broker. He was actually a good family friend of mine who worked with a broker, and he would actually come in a lot of times and say, hey, I think you should buy this stuff, and this looks good, and he really helped me build my portfolio. And then I managed to maintain that until I was about probably 24, 25. And then what ended up happening actually is the friend that I had, the broker who I was working with, he left, and a new guy came in. And I still had all the inside trading, resources, and all my buddies who were in oil and gas, and who worked in the market and knew what their companies were doing, that would shoot me some tips every now and then. And I would come in, and I was still making good money. But the next broker who came in to take over my account at that brokerage firm, because my friend left, like, he could literally not care about anything that he didn't know me from a hole in the wall, and he was he put me into a couple of winning trades, and this is stocks, by the way. This isn't forex or commodities or futures or anything like that. This is all stock related stuff that we're trading, and he put me in some stuff, and my account started to go down a little bit, and I thought, no big deal. I still got lots in there. I'm not too worried about it. There's dips in the markets, so let's buy, and it just kind of started to get really, really bad, and then that broker ended up leaving, and the next guy came in, and he literally put me into every dog shit, terrible IPO. I mean, just like you've heard the term pump and dumps. I mean, holy Jesus. And the problem was, and this is all what I'm driving at. The problem was is I had no idea how to trade. Zero. I just thought you put money into the market and it went up. I mean, literally, and it was that easy, and because that's all I had done. I put money into the market and it went up. And so, it was a real eye opener when I saw a trading account that was well into the six figures dwindle down to under six figures, and then dwindle down to, like, a fraction of that. Like, honestly, it went down to under 50,000, and I was like, Jesus, what is going on here? I better start either doing one of two things: stop trading, which I did, or two, learn how to trade. Because at the end of the day, and this is just my thoughts, nobody's going to do it better than I can do it. And nobody's going to have a vested interest in my money and growing my money than me, more than me, right? So I just kind of thought to myself, well, I've always loved trading. I've always enjoyed it, the challenge and the thrill of it. And I said, well, let's focus on this. Let's learn how to trade. So I spent a lot of money, and I mean a lot of friggin' money, on courses to learn how to trade. And at the time, that was the greatest thing since sliced bread. I thought I was an expert. It was a 2-year training course, cost a ton of money, like over, almost $20,000. And I actually split the cost with another friend of mine on these courses. And I did a 2-year program, and it was a very, high intensive program. And I learned all about stocks and options and futures and commodities and everything and anything under the sun. Every single indicator you could possibly think of, I learned about. Learned how it all worked, finished the course, and I was ready to take on the markets. And I got in, and I started trading in a live account, and I started losing a lot of money because A, I was very inexperienced. I was new. And B, I was just, I wasn't doing the right things that were conducive to being a successful trader. Like, one of those things being what I just taught you here: taking initial profits, at plus 30 pips into profit, moving your stop to break even. I wasn't doing anything like that. I was thinking this thing is going to make me $1 million, so I'd stay in the trade forever, and I'd make a little bit of profit, and then the price would reverse, and it would stop me out, and then I'd lose a ton of money. That was my trading psychology. I basically was trading without a plan, and if you trade without a plan, you're going to fail. And I didn't have a resource. Basically, what I'm boiling at is the resources that we're providing all of our clients. I didn't have that resource at the time, and I didn't even know that there were trading services around. And so had I known that, and again, this is a number of years ago. This is going back 10, 12 years ago, and didn't know it was around. And so had it been, I probably would have, done things a lot differently. But I just started to educate myself more and more on how price really worked, and understood that indicators, i.e., all of this stuff here, you see these things, you know, all of these things here, these Gann lines. Fibonacci is useful, but it's not useful in terms of looking for signals. Sorry, this is what I was going for. Oscillators and alligator and directional movement index and momentum and moving average lines and Bollinger Bands and Ichimoku, and I mean on and on and on and on and on. Listen, if you're trading off of those, you may see some short-term success, but long-term, it's not going to do anything for you. No, there's no indicator that's going to help you out. Take some off. It can. Dave, unfortunately, I just put one contract in, so I can't take a partial on a contract. I don't think I can do partial contracts on this demo account. But he's just suggesting move the stop up. If you're doing a trade with me here, move the stop up. Hopefully we shouldn't see a return. Maybe I'll just slide it down, maybe just a touch, but just maybe move it up just a little bit under the highs of these candles here. We should start to see some nice expansion going higher here. So hopefully that'll pan out, and but we shouldn't need to see price has worked this range in here, so you got to look. So price is in this consolidation range. It's really working this range in here. Price came up and traded through it, and then back through 1, 2, and then finally busted through it. Price shouldn't need to come necessarily back down to this range here, so you can move your stop up a little bit there. Don't jam it up under here or anything like that. That's too close to the market, but you can move it up a little bit there, capture a little bit of profit. Yeah, so that's about what I was talking about. I can't remember. I lost my train of thought there after that last one, but anyway. Oh, yeah, indicators. Yeah, sorry. So these indicators list here, if you guys are relying on these indicators, please don't. It's going to be a recipe for disaster. And listen, and this is from speaking from experience. That's what I did. I used moving average, the 50, stochastics, the moving average, the SM, simple moving average, exponential moving average. I mean, did it all. Bollinger Bands. I did. God, what else did I do in here? I didn't do any of these. I did standard deviation, oscillators, the MACD. That was a big one. A real popular one. RSI. RSI is good. But you can get RSI by just looking at a chart. You don't need an indicator to tell you if it's overbought or oversold, but you can use RSI. Don't take your trades on it. It's used for confirmation only, but don't get any trades off of it, and things of that nature. Like you'll never see on our charts. You don't see those indicators. Like this is a chart, right? This is a naked chart. This is what we use. This is a cable chart. I'm using horizontal lines. I'm not even using trend lines, because again, these things here, they don't work, right? I mean, look. Let me show you. Look, see, here's a nice bullish price move, right? Well, what happened here? Why didn't this trend line work? And that's what I was finding, is I was taught in the beginning when I paid all this money for that course that I was telling you about, use a trend line, right? The trend line, and that's how you trade. That's how you, right? Like this stuff here, right? Trend lines always work. They always work until they don't. And then look what happens. But I couldn't understand why price was doing that. And that's what I wanted to know. Like, why is it going down here? And why is it dropping me out and taking me out of these trades? I couldn't understand that. And so it kind of led me to a different school of thought on trading. And I don't necessarily believe what I was trained. And I've got some other thoughts on it. And the guys that I trade with are other analysts in our group. We are of all of the same school of thought as well too. So when you come in, and this is what I was driving at here, when you come in here, to make a real long story short, is that we all trade under the same style. So you'll get the same type of ideas and the same opportunities trading with us because we're the same three traders. We were all trained by the same group, and we all have the same beliefs in it. So you'll get a lot of confluence with that. So, and that's what all trading is. It's consistency, it's confluences, and it's predictability, and that's what we hope to provide. So. Anyway, unfortunately, I have to go. I can't stay any longer. I've got a meeting I got to get to here in about an hour, and I got to get prepared for that meeting. So I'm going to leave you with this. We've got a trade on the S&P. We're looking for the highs of the day to get taken. What I'd like to see, here's the thing, if price does not want to close, see this candle here? It may not be this candle, it could be the next candle. If price doesn't want to close above this willingly, like you see this, how it's starting to wick now, hopefully it's not going to come down and stop us out. But if it does, no big deal. We're in profit, so it's not going to cost us anything. And this is a demo account as well, too. We're not doing a live trade. But if price does not want to close above here in the next, give it about half an hour. If we're still chopping in here for the next half an hour, maybe 2, maybe 3 candles, then you may want to think about closing the trade and just taking whatever profits you've got. Or you can wait for the full target to get taken out. And this is what we're looking for. We're just looking for the price to stab up, take out those highs of the day, and then continue higher into next week. But like I say, I've got to wrap it up now. So I thank you again for coming in. I apologize for the audio issues we had. Dave's going to run out this weekend. He's going to look and see if he can't get a new microphone to fix that issue that he's having, and we'll be back at it again next week. So you can look forward to some analysis video coming your way for the week ahead, landing on Sunday for all of basically, if you can see down here, I don't know if you can actually see that on my chart. Let me just give me 1 second, guys. Sorry, just gonna move some windows around here. So you see all of these pairs down here. We do analysis, weekly look-ahead analysis on the USD, the Euro GBP, the Euro, the Pound, the Yen, the Loonie, the Aussie, crude oil, Bitcoin, S&P, gold, and then I do a number of different commodities in here. But we do that every single week on Sunday just to kind of give our members an idea as to what we think price is going to do. So you can jump onto our website and our YouTube channel. Make sure you click down here in the bottom right-hand corner, click the subscribe button, and you can look forward to seeing that coming your way on Sunday. And then we're back to our live scheduled sessions, live trading sessions again, Tuesday, Wednesday, Thursday, Friday next week. And you got a ton of stuff there. So we're going to leave it at that. Thanks again for your time, and we hope you have a great Friday, have a great weekend, and get some rest, because next week is going to be another great week of trading. So we will catch up to you then. Have a great day.